Welcome to the latest Motley Fool Scoreboard. I'm on in Chocolate. We've got longtime fools, Dan Kaplinger and David Meyer, giving a 1 to 10 rating to the company that's actually named Maple Bear, but does business as Instacart, ticker symbol CART. We'll start with the business, including factors like industry and competition. A 10 is invincible, a 1 is hopeless. David's going with a 7, Dan's going with a 6. Start with the more bullish David at 7.
So I am a recent convert to Instacart via my wife and my daughter. They love the platform and have so far had good experiences with it. To me, it's pretty clear that Instacart has developed lots of interest both on the supply side, think the grocery stores and things like that, as well as the demand side, which would be the consumer. The question becomes, how does Instacart continue to create and capture more supply and more demand going forward?
I'll just say I'm not a convert to Instacart. I still love going to the grocery store on my own, and I'm still one of these people, even when I order out to restaurants, I'll go and pick it up. Instacart, huge interest in grocery delivery, as David says, both from the viewpoint of grocery stores that are facing high labor costs and from the standpoint of shoppers who want convenience. There's plenty of competition, though. I think that worries me the most. Big retailers like Walmart and Amazon have kind of put their hands in this game. You also have other companies working it from the delivery viewpoint, DoorDash, Uber Eats. It's a tough industry right now, and I think there are questions about where future growth comes from.
And for full disclosure, we also use Walmart.
There you go. I'll say I'm in the middle where I'm trying to wean myself off of those bad pandemic habits of being more like Dan and going and actually picking it up. But it's hard. You're like, man, I can just sit here and play video games with the kids and can come to me. Anyway, management. 10 is Warren Buffett. 1 is Homer Simpson. David's going with a 7. Dan's going with a 6. Dan, tell us more.
I gave it a 6. CEO Fiji Simo. Done a good job so far leading Instacart. It's always a big milestone when you take your company public. Going through the IPO process is difficult. So kudos on that score. I think that the strategic vision that Instacart has to try to expand its business, it's definitely ambitious, which can be a good thing. The question is whether you can deliver. It may be too ambitious in order to deliver on those promises. That's why, for now, I'm sticking with a 6.
Yeah, I completely agree with Dan. Fiji Simo has had quite a bit in her shopping cart since becoming CEO in 2021. But I do also think she's done a good job of managing it. I really would like to have seen the founders stick around a little bit more, but that's more of a nice to have than a must have when you have someone like her at the helm.
Financials get a little rockier here. A 10 is a fortress. A 1 is yikes. David's going with a 6. Dan's only going with a 4. We'll start with that 6.
Yeah, the reason I'm not down in Dan Kaplinger territory is financial performance has been improving over the past few quarters, so that's a good thing. But that being said, investors are going to want to see continued movement towards scale. That will be challenging given the two-sided network that we talked about of you got to make sure your grocery stores are happy and you got to make sure your customers are happy. But I think management understands the importance of managing both sides, and they're working towards making sure both parties are happy.
Yeah, the reason I gave it a 4 is that there's only so much that you can do to keep both sides happy in that equation. Yeah, you've got good revenue growth. I like what I'm seeing on the revenue side. There's just plenty of red ink on a GAAP basis. They're still having to hand out incentives to new customers to sign them up. I'm kind of surprised by that because the pandemic was proof of concept. And so I would think that people would either be on board or not be on board at this point. Apart from that, I just wonder if the take rate can expand, like which direction you can make it expand. If you're still paying customers to sign up, that makes it seem like maybe you can't do much on the consumer side. I don't know what the value is, how big the value is on the grocery side, where you can ask the grocery side customers to basically pay more, give up more revenue for Instacart related shopping. Maybe they can prove me wrong, but until they do and it shows up in the financials, that's where my score is going to be.
It's tough because of that competition, right? Like Uber Eats, just yesterday we were looking at Costco. We've never had it delivered, but we realized, at least for us, it's actually cheaper on Uber Eats than Instacart because you don't get the markup as much. And it's tough. Uber Eats, that's tough competition, and others. So we'll probably talk about a bit and top it. Let's talk valuation. Uh, how well will the stock for Instacart do over the next 5 years, Dan? And how safe is it? Keep in mind, a 10 is a sure thing, a 1 is a lottery ticket.
So I gave it 0 to 5% returns. That might sound harsh, but keep in mind my baseline level for the market broadly is around 5 to 10%, given the big bull market run that we've seen lately, at least over the next 5 years. Gave it a safety score of 5. The stock has essentially doubled in the past year. I don't see the fundamentals. Fundamentals have improved. They haven't really quite kept up with the pace of the share price gains. I think investors are kind of hoping that momentum picks up and accelerates from here. But I think that there's a risk of a big drop stock-wise if there's a disappointment on that score. That's why the safety score of 5.
So I actually have returns being the 10 to 15% range, but also gave it a safety score of 5. So I think Instacart has lots of opportunity ahead of it, and it trades a little more reasonably following its third quarter earnings report. But I completely agree with Dan. There is no doubt there is considerable execution risk from here because this is a difficult business to operate. That said, the recent improvements make me a little bit more excited about the company. So that's where I think a little bit more return can come from.
Top it time, Dan. You like anything better than Instacart in its space?
Like I said, I'm kind of old schooler, so I'm more likely to invest in a tank of gas so that I can go drive to the grocery store on my own than buy stocks in this area. If you made me pick one, I'd probably go with DoorDash. I kind of like the restaurant focus. I think people have kind of trained themselves. If you are not going to cook at home, if you're already doing the convenience of ordering at a restaurant, why not double down on the convenience by having it delivered? I also like how DoorDash is trying to expand into retail. Worth a closer look. Ticker DASH.
So I'm going in a slightly different direction here, both from a business standpoint and from a geographical standpoint. Grab Holdings. So this does a little bit more than just like Instacart's grocery delivery. It also has other delivery services. It's like Uber. It's like DoorDash. But it only operates in Southeast Asian markets. It's a really cool little company, and it's trading at an attractive price. So yes, Grab Holdings, ticker symbol GRAB.
Thank you to both David and Dan. They've given Instacart a weak overall score of 5.7 out of 10. David's more bullish than Dan is, but his solo score wouldn't have even hit a 7, much less an 8 that would force me to own shares. Look out for a new scoreboard every market day at 7 p.m. Eastern. Next up, we're going to play Bob the Builder and hit the construction space. Till then, Fool on. So the one founder, he's from India, but he emigrated to Canada, so Maple. And then the bear in the California flag for where that is, so Maple Bear.
It's time to change the corporate name.
Yeah.
Real simple. $50 at the Delaware Secretary of State's office.
There you go.